Trump fundamentally is this weird kind of hybrid on the political spectrum because he ran as a Republican, but, in a lot of ways, a lot of the things that he's pushing aren't traditional, Republican ideas.
You heard Elizabeth Warren, I think, saying, hey, Trump, I think that's the only thing that we agree on, that we get rid of this debt ceiling. And Trump was like, yeah, let's do this.
We're in this weird world where if the deficit is the driver of everything. And so all this to say, now we're at a point where it's like the U.S. is basically in full-on Ponzi mode because we had somebody try to do something about it. It was unsuccessful. As an American, I think Elon loves the U.S. When you're betting on Bitcoin, you are kind of betting against the U.S. or at least, the currencies. It's a bet. It's not one that you necessarily want to make.
Yeah, maybe, as you say, maybe it's not something you want to do, but at some point you're maybe just forced to do it.
Will Clemente is a top crypto analyst and co-founder of Reflexivity Research, known for translating blockchain data into sharp market insights.
He's built a massive social media following and now leads US strategy at digital asset market maker KeyRock.
I think we're shifting into this world more so tied to actual valuations based on actual revenue that things are generating. There are a couple protocols out there that are generating a significant amount of revenue and are returning the revenue to those token holders in some capacity. If you've been paying attention for this long, you might as well keep paying attention on the altcoin side. It is really cool over the last couple of years to see the complete pendulum swing back from the Gary Gensler world to now all of a sudden seeing, Circle IPOing and all the developments. I think it's probably just getting started.
Hey guys, I just wanted to let you know, I published a new book, The Bitcoin Enlightenment, co-written with my buddy Daniel and none other than Mexican billionaire Ricardo Salinas. It's a deep dive into the monetary system and its future. In it, we make the type of connections that go beyond what you'll hear from your average Bitcoiner, MMT advocate, or macro pundit. So grab your copy on Amazon today. You'll find the link in the show notes. And now on to today's show. Hey guys, welcome back to Less Noise, More Signal. And today I'm very honored to have Will Clemente with us on the call or the pod. So Will, thanks a lot for coming on. That's amazing.
Hey man, great to be here. Thanks for pronouncing my name correctly. Very, very few people do. So good to be here with you. Maybe we kick it off with should we talk about how we met in Switzerland?
Yeah, that would actually be nice. I was quite excited when I heard that you're coming to Switzerland. So, maybe you can kick it off.
Shout out to the Valor guys. They kind of connected the two of us, and we had a nice lunch in Zug, which I enjoyed very much. So, I definitely would love to get back out that way at some point. It was very beautiful, very peaceful there. It felt very safe. It was a great area.
Yeah, Zug is an amazing place. I mean, it's this really Swiss place, with the mountains, with the lake. It's really laid back, as you said, but at the same time, you have this vibrant community when it comes to Bitcoin and crypto itself as well. And a lot of interesting and important people like yourself come there every now and then it's just amazing, to get to talk to them. So that's the cool mixture of this place. Yeah, Zug, for sure.
It's a big crypto hub, right? Zug?
Yeah, it is. Yeah, there's a lot of events. I mean, obviously because Zug is also tax-wise is quite interesting. So we have all the foundations who are sort of listed here, and registered in Switzerland. So probably Ethereum, everything else that has some sort of name is here. And you never really get to see any of these people because it's just a company that's registered here. But every now and then we have events and these people fly over. So it's quite a hodgepodge, so to say, of interesting people. That's cool.
Yeah, I got to check out other parts of Switzerland for sure, but I've definitely been recommending the area to my friends. So.
Yeah, no, let me know whenever you come back over. Then obviously I wouldn't mind showing you around as well. It's there's many other cool things to see in Switzerland for sure, and everything is so small. Within 3.5 hours you can drive across Switzerland by car almost, and so everything's nice. Nothing compared to the US. Well, but I mean, the US is still something which is on everybody's mind, even here in Switzerland, all the people are following it. And I think there's no better way to start, maybe, with the Trump Musk situation, like
There-
what's going on. But maybe you can quickly introduce yourself for all the people that might not know you. And then just how are you feeling with what's happening with Trump and Musk, the entire situation?
Yeah, sure. Yeah, my name is Will Clemente. It's probably read in the title. Basically, I kind of fell in love with the markets and specifically found the biggest opportunity to be in Bitcoin and kind of the broader crypto landscape maybe 4 or 5 years ago, and in the middle of 2020. Ended up after a while dropping out of school, kind of pursuing some type of career in the industry just because I saw there's a huge opportunity there. Dropped out of school after my sophomore year of college and then never really looked back. Spent some time over at a Bitcoin mining rig brokerage firm called Blockware for a year, and ended up parting ways after a year. Enjoyed my time there, all good people over there. But wanted to kind of develop my own thing and kind of evolve my skill set more, learn new things. Ended up launching a research business called Reflexivity Research with Anthony Pompliano at the end of 2022. It was an interesting time to launch a business 3 months before FTX went down, but nonetheless, 3-6 months later, things started to get a bit of traction. Ended up doing all right, and then got acquired a year later by a publicly traded company. Stayed on for a year, helped run the firm, hosted a couple conferences. Really enjoyed working with those guys over at DeFi Technologies, who recently just got uplisted to the NASDAQ. So congratulations to their team. And then back in February, I stepped down, kind of took a brief hiatus, kind of thought about what I wanted to do. I always am kind of managing / trading my kind of personal account in the background. But did a little bit of traveling, took a month or two to kind of compile myself and figure out, what I wanted to do as kind of next steps. Obviously love the market, love participating in the market. That's kind of my dream at the moment. It may change because, the frontal cortex of my brain isn't even fully developed. So maybe I'll change that another 3 times by the time I'm 25. But, decided that I wanted to go down kind of the market making OTC route because that would give me kind of the most exposure internally inside of a real institutional grade trading shop, get exposure to different aspects of the trading business from the inside. So I decided to join KeyRock, which is a European firm based out of Brussels. Have a couple other offices as well, but just started a bit of a push into the United States. Did kind of a PR release about a month and a half ago. We have our chief commercial officer, a guy named Robert. He lives, up in New York. They brought me on looking at, kind of expand our presence in the States. And that's why I really joined, was to do exactly that. I help kind of both the corporate and institutional sides of the business, from a BD strategy perspective. So, on the corporate side, working with primarily foundations, but other types of entities as well. On the institutional side, it's more, on the OTC desk, finding trading partners for us, things like that. And I've been here for 3 weeks now, which is already flying by, but I've been enjoying it. And, here we are now. I've been starting to, slowly creep out of my hiatus and get myself out there a little more, do some more podcasts. Been scheduling some meetings with people, of course, and just getting myself back on the saddle after a brief kind of moment to figure out what I want to do next. But excited to be where I'm at and really enjoying my time so far here.
Yeah, amazing. No, it's cool to see you back, and just like also on X, all your tweets. I've been following them for quite a while, and it's always interesting. And now you posting more is a net benefit, I would say, for the community. So amazing. I mean, maybe we can get into KeyRock later on. Like, what exactly are you doing? Maybe you can shed some light there as well. But yeah, as I said, maybe we could really start with this macro situation, that's going on in the U.S. I mean, people would be curious to hear your thoughts, I guess, on what's been happening. Like, Musk was all over Trump, when it started, and now it feels like they're really up in their each other's hair, so to say, and there's like infighting's going on. So what is your take? What's happening here? And maybe also who are you siding with?
Yeah, 100%. It's been a very interesting time in the United States, to say the least, over the last, couple years. I think, there's a couple, I mean, there's obviously very nuanced, situation, kind of different variables and, driving forces behind things. But, I would, to tie it back into kind of a Bitcoiner, market perspective, I think, when you look at historically where a lot of empires run into issues, a lot of it has to do with debt and the devaluation of currency, and a lot of things stem from that. And I don't think it's any secret that over, or any coincidence, I should say, over the last, 5 or 10 years that we've seen an increasing amount or level of political polarization here in the United States. I think that is a partially a derivative of that. Over the last, 2 years, we've had this crazy kind of swing back and forth on the political pendulum from, kind of Biden administration's approach to things, and then all the way back the other way, both from a, outright political perspective, but I would also argue there's a big kind of swing from what people are viewing as kind of this elitist bureaucratic control of the government towards this kind of push towards populism, which, Trump fundamentally is this weird kind of hybrid on the political spectrum, because he ran as a Republican, but, in a lot of ways, a lot of the things that he's pushing aren't traditional, Republican ideas. Things like basically taxing the rich and redistributing to the poor. This is like a traditionally more, Democrat thing. I think you're about to say something if you want to.
Well, I mean, you're exactly right. It's also the tariff thing, that I've seen this video floating around when it was first announced in April, and made big. And so we saw this video by Nancy Pelosi when she was still younger, giving the exact same speech, like maybe in the 1990s something, that Trump has given and all his supporters. And she obviously is like the hallmark of Democrats, so like, or the really the head figure of these people. And so it's so interesting that these sort of things changed. And as you said, he's a Republican, but in many ways he's not. So yeah, sorry, you just wanted to say this. Go ahead. This show is brought to you by NewHedge. In a market driven by complexity, insight is everything. NewHedge is a dedicated Bitcoin analytics and intelligence platform delivering cutting-edge analysis, on-chain metrics, and real-time market data. With 200 plus proprietary indicators, live derivatives data, and adoption metrics, NewHedge provides the depth and precision that serious market participants demand. Backed by some of Bitcoin's most prolific investors, NewHedge connects traditional finance with Bitcoin's evolving landscape. Gain your data edge today. Sign up for free now at newhedge.io and get 50% off your advanced subscription with the code SIGNAL.
Yeah, no, 100%. Obviously, Trump got sworn in January. His administration got straight to work. I mean, you have to give it to him, love or hate the guy. I mean, they hit the ground running as soon as he got sworn in. Towards the, I don't know, within the first couple weeks of Trump getting in, you started to see this very, in my opinion, very explicit rhetoric from him and Scott Bessent that they were trying to get stock down, or they were going to be open to the idea of stocks having some pain. Basically, the combination of the attempt to cut the deficit through Doge, which obviously now we'll get to in a second, has gotten completely reversed. The slowing of immigration into the U.S. And the tariffs as well. I think all of these things combined back in February, in my eyes, was a concoction that was going to be bad for asset markets, specifically for risk, especially when you paired the fact that equities were trading near all-time highs. So, at the time, I had become quite bearish, probably the most publicly bearish I'd ever been, which was a lesson that I probably will never be that publicly bearish again, because it was just very uncomfortable experience from like a public, kind of persona perspective, or like people attacking you. So next time I'm just going to keep it to myself. But obviously we ended up trading down to 75 or so. And around then, we had this we had this kind of point where, we started to see some, kind of weird things in the bond market. The move index was at 140. So, the volatility in the bond market was quite extreme. And basically, Trump ended up reversing tariffs, and, basically everything that, bulls would have wanted to happen ended up, taking place over the coming 2 months. It's been quite, incredible reversal, like fundamentally from all the things that, were in place that the market was pricing in just, a month and a half ago. But now, where are we today? In my opinion, if anybody was going to be able to cut the deficit, it was going to be this administration. You put Elon Musk, the guy who's kind of figured out how to do basically everything, in a position that, he's in charge of doing so. And, now, I'll segue this into what happened over the last couple of days in a second. But, him paired with, I think Scott Bessent's a brilliant guy. And basically, I think, what they realize is you just can't do it. Like, the political incentives to get all of, the other legislative bodies on board, it's very difficult because people have short-term incentives to get reelected. And, in the US, we've been addicted to easy money for so long that it's just, not the political incentive for people to try to cut spending, because people are, so used to this kind of like almost like, they're addicted to this drug, which is, the liquidity flowing through the system. And if, somebody doesn't spend, then they'll put somebody else in that will. So you have this very, tricky, kind of incentive structure, I think, in the States, in terms of, our kind of political leaders, or people in positions of power, in the government. And so, you basically had the biggest attempt to try and do something about this debt situation. The market forced Trump in the administration to walk it back in a matter of 2 weeks. And so now where are we today? Bessent has completely reversed, him talking about earlier this year. I mean, it feels like yesterday he was saying, oh, we're going to get the 10-year down. That's like the primary kind of like, KPI for Scott Bessent was the 10-year treasury yield. Now that's completely reversed. We've thrown that out of the window. And now it's, oh, we're going to grow our way out of it. So instead of focusing on, the debt component, we're going to just focus on, the economic output component on a relative basis to grow our way out of this high debt load relative to the actual output of the economy. And so, I think that's rhetoric that obviously, the markets responded accordingly, gonna juice the markets. And so I think we're, I guess that's to tie into the Elon thing. I think Elon really did want to try to cut, spending, and he wanted to do something good here. I think anybody that's hating on Elon, it's really tough now because, I guess you could make an argument that the guy was, trying to become buddy with Trump so that he would get, more subsidies or, some type of favorable treatment from the government. But, obviously now with him and Trump having a falling out, like he's not going to be getting any of that. Now Trump's like talked about like, selling his Tesla and like, basically like completely, if pardon my French, completely shitting on Elon. And so, I think we're in a spot where, no one's going to be able to really, be effective in cutting our debt load. And there's a couple of implications I think that has for markets, and one that I'm kind of making an active bet on because of this, but I'll kind of pause there.
Yeah, no, that was great explanation. I mean, just to your point about Elon, I mean, he really feels to be sincere in all of this, like there doesn't seem to be any hidden motives. Like in the beginning, maybe you could have thought, okay, there is, but like, if you really think this through, like he's just like sort of, yeah, he doesn't have to attribute to anyone, or pay tribute to anyone, because like he's like the richest guy in the world, and whatever, if he loses a couple of subsidies, yeah, it might be bad for Tesla, but yeah, I feel he has reached this point where he can just, yeah, again, sorry my French, but he has this sort of fuck you money, where he can just do whatever he wants, and so I really felt like, okay, he's sincere, and he's serious about doing this, and now that he kind of figured out it's not going to happen, he's really disappointed, and so that's also where I'm sort of siding with him, you know. But I mean, I just had to think it was sort of naive in the first place to think that he would succeed, because if you have any understanding of economics and like public policy and how that works, you know, like even though you have the Republicans and the Democrats, like these two parties, in the end, when it comes to this debt situation, I think this was also emblematic, the situation where you heard Elizabeth Warren, I think, saying, "Hey, Trump, I think that's the only thing that we agree on, that we get rid of this debt ceiling." And Trump was like, "Yeah, let's do this." This really showed to me that when it comes to the debt situation, there are no parties. They're all the same. You know, it's like Lynn Alden says, "Nothing stops this train," or this other meme where people say like nothing ever happens. You know, like if you are a Bitcoiner, you have this perspective and that lens. You're like, okay, it was always predictable that this is what's going to happen, and that nothing will ever happen. You know, and so I don't know if you have any thoughts there, but it really feels like it's only one trade, as some people also say. You know.
No, 100%. I don't really have anything to add on there. I think that's exactly it, right? I mean, again, the politicians in a place of power, their incentive is to get reelected because that's their career. We don't have performance-based like KPIs or compensation for politicians. So, Charlie Munger, right here, show me the incentive, I'll show you the outcome, right? And when your incentive is to get reelected, you're going to do the things that give short-term gratification to the public to keep you in power. So yeah, it's 100%. It's very difficult. Also, I came think I would think obviously I kind of agree with Elon being a bit naive, but I do think if you basically if you built out some of the world's most successful companies, multiple times in a row, you probably have this idea of like, I can do anything, but also to your point, if he can't do it, who can? And I think that's the scarier thing is, we've been talking about this, this issue in the US. This is like basically the whole Bitcoin thesis, right? I mean, there's other components obviously to it, but I would say this is like the core backbone of the Bitcoin thesis is that governments, central banks around the world are going to have to continually devalue fiat currency, right? I mean, again, other components, that's like the main one. This has been the first ever attempt. Bitcoiners always say, "Oh, you can't taper a Ponzi," right? All these phrases that they come up with. This was the first real time, or at least in the 4 or 5 years that I've, been a participant in holding, or investing in Bitcoin, whatever you want to call it. That you've seen the government actually try and do something about this, or at least in my lifetime. I mean, I haven't been around for so long, but never really seen that level of an attempt to do something about the deficit. And it was again instantly by the bond market in 2 weeks. So then you say, okay, well, you start to think about
something.
realistically, like, okay, is somebody else going to come along of the same, intelligence, drive to do something about this as Elon Musk? It becomes more of like you have to coordinate people as opposed to like, because you can't have one person that's going to come in and be able to do more than Elon did. And so all this to say, like, now we're at a point where it's like the US is basically in like full on Ponzi mode, because we had somebody try to do something about it. It was unsuccessful. And so now you're at the point where it's like, okay, well, I guess like, and this is exactly what the administration's done. Now we have to pivot to just the only way we're getting out of this is if we just have this like, productivity, like AI, robotics, utopia driven, productivity boom, which maybe is true, right? Maybe we're on the cusp of, the next big, industrial revolution in AI and robotics, and that's going to drive us out of the situation we've got ourselves in. But I'm not smart enough to know if that's the case.
Yeah, no, sure. No, that's something I'm grappling with as well. And I will have another guest, like I think next week, Jordi Fisser. I think he's associated with Pompliano as well, doing the regular podcast.
You've been doing now the weekly series, like we used to. I think. Yeah.
Yeah, exactly. And he's from what I've read, he's really one of these proponents who says, well, I mean, the AI revolution is really a revolution, like of so big proportions that like this could actually be something that could really taper the debt, so to say, just in some shape or form. And I'm be curious to talk to him about this as well. But I mean, you're right. It really feels like, okay, this is crazy. What's been going on here? And yeah, the thing is really, can we get it right this time? Uh, I mean, in the end, I just feel curious. Yeah, as you said, it is this watershed moment, and Bitcoiners, it's always the same. We feel like living in the future, already knowing where this is going. But in the price itself, it's not like reflecting immediately, obviously, which is maybe markets have to kind of digest this. But then I was also wondering, like, uh, Musk was proposing on X, should I form a new party? He's going the political route still. Like, okay, I couldn't do it inside, so maybe I'll do a new party, and then I can get the wheel around. But other people, like especially Bitcoiners, were proposing, well, why don't you just smash buy Bitcoin? That would be the right way. And do you think he will come around at some point? Or because he was in 2021, he was all over Bitcoin. Tesla still holds Bitcoin, but it feels like he doesn't bring it up anymore in conversations. And do
Good.
you see, or any thoughts on why this is the case?
Yeah. I did joke around yesterday or the day before. I said, the way that Elon can get back at Trump is by buying Bitcoin. And then people were giving me a hard time because they're like, oh, well, Trump has a meme coin. So, it'd pump his meme coin. I don't know if that's necessarily true. But making the point of, obviously, like, Trump's in the head of the US government at the moment. And, Bitcoin's a hedge against the debt situation in the US. I think, though, as an American, like, it's I think Elon, loves the US. It is, when you're betting on Bitcoin, right? I mean, you are kind of betting against the US, or at least, the currency. So, I don't know if it's like, it's a bet where, it's not one that you necessarily like want to make if you're somebody who is, takes pride in your country and, wants us to be in a great state and continue to be the strongest nation in the world in 25, 30, 50 years. But, maybe Elon's thinking about it. It seems like he's going down kind of the rabbit hole that all the Bitcoiners do. So, yeah, I mean, obviously that'd be super cool if he came out and bought a couple yards of Bitcoin.
Yeah, yeah, yeah. Maybe, as you say, maybe it's not something you want to do, but at some point you're maybe just forced to do it. And then maybe if you go deep down the rabbit hole, yeah, you feel like forced, and then we'll see him come back and come around again, because that Tesla, I think, is still holding on to these Bitcoin that they bought in 2020 or 2021. So I'm just curious to see what's going on there. I mean, yeah, what do you also tweeted that you feel like we're in this weird situation, in this backwards world where, with the focus on the deficit, which is in the driver's seat, we could see equities sort of hang in and Bitcoin and gold do well while yields rise, and traditionally this is something, when yields rise also on the long end, then people like, risk is increasing and risk assets are not doing well. But you're like, okay, this could now be sort of reversed, or like, just we could have it backwards. And so could you flesh this out, your thoughts there as well?
Yeah, 100%. Traditionally, like you said, when the long end of the yield curve blows out, when yields are rising, that's a negative for risk, but specifically it's negative for equities, because when you're putting in a basic discount cash flow formula to try and determine, based on the current prospects of the business and the cash flows that it's generating, what should it be worth in the future. Component of that is the risk premium, or which is used as the discount rate in your discount cash flow formula. When that's higher, you need a higher return to justify owning a risk asset. If 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 I if the well, it's very simple 1 year bond, right? This isn't the long end, but I'm just making a very simple point to determine. If 1 year bond yielding 5%, you've got Walmart stock, you think it's going to return 10%. Well, there's a 5% risk premium that you're getting for owning the equity. So it makes sense. But if they're at parity, if I can buy a bond and over that time period get 5%, whereas if I own Walmart stock, I'm going to get the same return. Well, maybe I just buy the thing that's backed by the full faith of the US government, as opposed to owning, a stake in this company that could fluctuate and there's tail risks to it. It's not, a completely guaranteed return by the faith of the US government. And that becomes increasingly the case as you go out on the risk spectrum, right? Because if you're owning Walmart, it's a lot different than owning, Palantir or one of these, riskier kind of, retail driven stocks. So traditionally, as the long end of the yield curve, which is what, typically the 10-year yield is what people are using, as this blows out, it's typically bad for equities. But we're currently in this is kind of like the crux of my tweet. We're in this weird world where if the deficit is the driver of everything, right? Because we've let the situation get to this point where everybody's like generally focused or has the kind of the deficit in the back of their mind when they're investing. How do you position against that? Well, if they have to debase the currency, assuming that we don't get this big productivity boom, they have to debase the currency or let inflation run hot to service the debt load in real terms. So you could own hard assets like gold or Bitcoin, which are scarce, and as they have to produce more dollars, you can hedge against that. You could own, a tech company, which is, generating cash flows. If you've got inflation running hot, then the cash flows of the business in nominal terms are going up. And also, I would argue that, especially with passive flows from pension funds and all these big investment vehicles, that's driven up the multiple premium that we've seen over the last 15, 20 years. Like fundamentally, the flows are changing this dynamic of like what's like fair market value for these companies, because I would argue people are viewing these things as hedges against monetary debasement in the same way that we own Bitcoin. If you're sitting there with $100 billion, it's like, okay, well, where am I going to put this money to work? I mean, up to date, it's been very difficult to put even 1% of that in Bitcoin. I mean, I don't think that's the case anymore. But it has been to date. And so I think a lot of people have been using tech as a way to hedge against monetary debasement and somewhere to park their money. And then the other component is, you'd expect that yields are going to blow out as well. Because, the deficit is growing, we have to print more money. You're likely going to get inflation. You're going to demand a higher yield for basically holding US debt over that time period. I mean, who the hell wants to hold US debt for 30 years at 5% return? Okay. Like what are the odds that inflation is at least 5% between now and 30 years? Which is tremendously high. So if you're holding a 30-year bond, you're basically buying a contract to lose money, guaranteed to lose money in real terms. In nominal terms, of course, it's going up in dollar terms, but in real terms, adjusted for inflation. And so to like where we are now, I think that dynamic might start to, it's just weird, wonky world where you could have yields go up because people are, concerned about the deficit, but you could also have people bidding up BTC and gold. But, BTC is kind of this weird thing where it's potentially in this transition period out of being seen as a pure risk asset into this, more gold-like thing. But also equities as well, because if you're running the deficit super fat, you're just juicing the economy, with fiscal spending, that can benefit equities as well. So yeah, I mean, basically where I'm at is I think it's going to be difficult for us to have a significant recession with the information as it has changed over the last month and a half, because we're just running things hot, and all this kind of austerity talk, it's all out of the window. But you do still have a slight drag maybe from tariffs. We're back to the same valuations as earlier this year. I'm not short equities, But if, this is kind of the view of this is where we're at, right? The thesis is US is in full on Ponzi mode. I would like to own gold, maybe, or Bitcoin, maybe some gold. And I do like being being short the long end of the yield curve as well. Specifically, like full disclosure, I have this position I've been building of being short TLT. So basically my personal portfolio as it's constructed today, I don't have this pair trade on. It's just kind of coincidentally, like I've got my long-term Bitcoin holdings, and then I've been building up this, short on the long end of the yield curve over the last, 2 months that I have a 12, 16 month time horizon on.
Good.
I've effectively, even though again, I'm not, explicitly like putting this pair trade on, I've effectively put on, long BTC short bonds, which is kind of also the Bitcoin trade itself. Some people giving me a hard time of like, why not just double down on adding more BTC? I think the thing is though, if the long end blows out, there is this slight headwind that's probably put on equities and then potentially BTC as well as this correlated risk asset. So, basically it could perform exactly how we want it to, as, BTC goes up as yields go up, if I'm right. It could like that. And I hope it does for my core long-term Bitcoin position, which is a very big chunk of my personal portfolio / net worth. But it might run into some headwinds if TradFi, fund managers trading this stuff, if yields blow up, that gives some type of headwind to equity valuations, and then BTC gets dragged with that. I'd rather just bet on the thing itself, which is yields. So that's basically why I've positioned myself that. But yeah, we're in a very weird, wonky spot at the moment, and a lot of traditional, I think, like ways to think about things are kind of getting flipped on their head at the moment.
Yeah. That's also why we keep on hearing that the traditional 60/40 portfolio is just not going to cut it anymore. And so I'd be curious on your thoughts regarding like short-term treasuries, like bills, because like if I talk to older people, especially, the ones that are maybe just before their pension and they really want to go retire, they're like, okay, I can't put all my things in tech stocks and BTC. Maybe some gold as well, but because I need to have some security there, maybe it still pays like a decent yield. And so, but you're a young person, you have so much ahead in your life. So are you considering like short-term bills at all, or?
Yeah, I also forgot to say this before I started talking, and compliance team is going to get on me for this. Not financial advice. These are all my personal opinions, etc. Yeah, I hold T-bills basically as like cash equivalents instead of cash. There's like various programs that you can basically like pledge dollars to a brokerage type of platform, or banking type of platform. They'll basically take the dollars, they'll roll it themselves into short-term T-bills. They keep like a tiny margin on that, and then you're basically able to just hold the cash and get 4.5-5% yield. Probably adjust it down. Maybe it's like 4.5 now. But
Yeah.
I keep I'll keep my kind of a lot of my cash proceeds in those types of vehicles. Because yeah, for short term, you're only cash for a couple months. Obviously, you'd rather get some yield on it than nothing. But to say, hey, I'm gonna hold U.S. debt for 30 years and get 5% back. To me, that seems insane. Especially what is 3-month treasury bill right now? 3-month treasury bills are 4.43%. So that compared to the 30-year, which is near 5%. So you're getting almost a 1% premium for holding the debt for an extra 29 and a half years.
Yeah.
That's
Crazy.
well, the 3-month yield is annual. So
Yeah.
yeah, I do like I do like holding these things, these kind of programs I mentioned. I Obviously, again, not financial advice, but instead of
Yeah.
just cash to make sense.
No, makes a lot of sense. Yeah. Yeah, and maybe also in terms of like we've talked about Bitcoin and it's really the trade is on. Everybody, especially who is a Bitcoiner, know why we're holding this. But then obviously the crypto market is wider, and I don't want you to drop any specific names in terms of alts, but like how do you conceptually think about the entire crypto market by now? Because as you said, you've been trading this for five-ish years something as well. And so are there any serious alts? Should people stay away from alts altogether? Is it really just for trading and not long term? And what are your thoughts there?
Yeah, I know this is a bit more of like a Bitcoin focused podcast, but I do think things are shifting. I've always been, kind of a cynical optimist when it comes to stuff outside of BTC. The main thing I've been bullish on is stablecoins, and I think that's a hyper trend that's going to continue. And I think actually most Bitcoiners feel similarly about stables as well. Obviously the problem has been over the last 4 or 5 years that a lot of these altcoins really haven't had any fundamental, revenues that they're either generating, or if they are generating them, tying them back to the token holders to make them like to make the tokens, an investable asset. I do think we're shifting out of this age of, um, having no revenue, these, pure governance tokens and saying, hey, this thing needs to be worth $10 billion. I think we're shifting into this world more so tied to actual valuations based on actual revenue that things are generating. So, there are a couple protocols out there that are generating a significant amount of revenue, growing significantly, growing those revenues significantly, and are returning the revenue to those token holders in some capacity. You're starting to see things like yesterday I saw a press release of a foundation completely shutting down the equity component of how they had the legal structuring of the foundation, purely driving all revenue to the token. So you're starting to see more of these things. I think also the types of the types of participants in the market are going to change, and that's going to change where capital is allocated. As these TradFi guys come into the space, they're not going to bid, some random, the meme coin stuff will always be there, right? People love speculate, far tail stuff. That'll always be there. So at least to some extent, when the market's hot, it goes more. People are comfortable, putting on more risk. But for these kind of like long only liquid fund type of buyers in the market, who basically are like almost always allocated, they just start changing the basket of like what they're allocated to. I think again, the age of like investing in these, tokens that have no value accrual, I think that's the sun is setting there, and there's a shift towards, and you're seeing this in price action of thing, relative performance, across all of these things. You are seeing, potentially these guys that are coming in from TradFi and saying, look, I need to value this and justify, buying this based on some type of valuation methodology that I'm used to, which is, discount cash flow models, saying, hey, I'm taking the revenue cash flow of this thing, and I'm putting some multiple on it, and it justifies me saying, hey, this is like cheap or not. And we get into the world like comps and all these things. I think we're in an interesting spot too, because there's only so many liquid, investable assets that are generating significant revenue that I would say like have a degree of a moat in crypto. I think you could literally count them on your hand. And so I think those things probably generate a premium, because, there's only so many. If this new kind of paradigm that people are investing in is, hey, look, I'm looking for real revenue to invest in that's actually returning the value to token holders. Well, there's probably a premium for like a few assets in this like transitionary period. But I do think I am optimistic, as somebody who likes to speculate on these things. There's no better feeling than buying a meme coin than it, 90xing in like 2 weeks. But like, it is going to be nice to be able to say, hey, look, I'm speculating on this thing, or like I'm able to hold this thing because I can justify being, somewhat, subject to the cash flows. And this is a problem that's kind of translated to like the price action and the holding behavior within these tokens. Because if I don't feel like I'm getting subject to any value accrual and I'm just holding this thing because of some speculative reason, as soon as as soon as the chart looks like it's rolling over, it starts to lose momentum, I'm
Done,
out.
yeah.
Because there's nothing for me to say like, hey, this is the floor on this thing. And, outside of maybe the price action or price structure of it, it's tough to say like, this is, I'm holding this thing and it's undervalued and I should add more because it's undervalued. So you get a lot of this behavior within, at least the traders of like, as soon as the momentum's gone, everybody gets out, or like, to the upside as well, something, bases out, starts to break up, everybody piles in and it is super reflexive. Whereas I think, but my point in saying all that is tough to hold something for a while when you don't have a fundamental reason for why you're holding it. But now, if you are subject to cash flows, you can say, well, I'm bullish on this thing. It's returning cash flow. So there is some fundamental floor based on the valuation because there's actual value being returned to me and the other people that are holding this. So I think that creates an incentive for people to hold these things for longer, which is good for price action because, when you have everybody saying, hey, I'm going to hold something with a 3 to 5 year mentality, you have less people panic selling and, ultimately probably creates better price discovery on the way up. So, I do think that it has been, a huge mess up to date. It is changing though. I'm optimistic that it'll continue to change. And I think there's shifts that if you're paying attention, it'll be quite fruitful over the next, couple of years. Because once TradFi completely comes in, sorry, I boosted my last one.
All good.
Once TradFi completely comes in, they're going to clean up, right? I mean, in a lot of the, like intraday trading, strategies, things like that. Once all these like MIT guys get in here with their algos, to directionally like intraday trade, it's gonna be tougher to do that. And same on the fundamental side. And I would argue that that's already, that ship is already sailing. But on the fundamental side, over the next couple of years, if you have a couple big winners on the fundamental side, and these guys are really able to wrap their heads around it and say, okay, well, this thing is growing at X amount a year, generating this amount of revenue, and they're buying back while returning the cash flow to token holders. I got to get in here. As soon as you see the flood of those guys getting in, it's going to be tough because then you're just fundamental investing against like traditional equity, investors that are fundamentally evaluating these things, and they've got these massive, teams of, Wharton and Harvard MBAs that are evaluating these companies. So I think you've got kind of an edge. If you've been paying attention for this long, you might as well keep paying attention on the altcoin side. Like over the next couple of years, I think we're in this transitionary window where if you're really paying attention, you'll be able to front run that wave of kind of fundamental cash flow based investors that may potentially be entering the market. Things change.
Yeah, these are some great points. I feel like, as you said, there's only a handful of these projects, who we're sort of having these cash flows and might also be able to grow it. But I mean, it almost feels like because we were from this one pendulum where everyone's really bullish on altcoins, they swung all the way to the other tail end, saying, okay, nothing has any fundamentals and nothing has any value in terms of altcoins, and then also these few good projects get taken away and then also sort of measured by the same yardstick, even though they would have some fundamentals. And that's exactly where the opportunity lies, and if you sort of carve these things out, I mean, as you said, I see the same thing with the bank that I'm working with, like these professional TradFi people, they're moving into the space now, and they're working on these valuation metrics, and they're going to really look at these things closely. And then we probably see the wheat being sort of separated from the chaff at some point. So that's a great point. I mean, what role should crypto equities play? Like increasingly probably a bigger, because I feel like the Circle IPO really proved that there's going to be a swath of new IPOs probably coming, because every sort of crypto startup CEO is now looking at this saying, okay, we have to get going. I think Gemini, we saw some news just lately. And so what is your thought there? I mean, yeah. And then maybe also the mining side of equities and the whole treasury, Bitcoin treasury companies. How do you differentiate there?
Yeah, the Bitcoin treasury stuff all set to the side because we're cooking something up, but
All
I'll
good.
put it out for now. Yeah, I think well, Circle, obviously tremendous success. I think was kind of embodiment of the demand for people to be on crypto in a way that they understand, but also specifically stable coins, because stable coins have been this kind of mega trend that I think a lot of people believe in, especially a lot of the crypto natives, but there hasn't been a great way to bet on growth of stable coins. Obviously with Tether and Circle, the two dominant stablecoin issuers, both being private companies up until this past week. So I think, it's just an embodiment of how bullish people really are on stablecoins. I think that, there's several reasons for this. I mean, they're just superior vehicles for payments and storing dollars on a digital wallet, unlocking the ability for people to hold dollars around the world. Um, I also think that, the US has a higher incentive than ever to embrace stable coins as, right now, I believe like the 15th largest sovereign holder US debt combined. If you, put Tether and Circle, together, that'll probably be, they'll probably become like top five at some point. Um, I feel tremendously excited about stablecoins. So it's no surprise, I think, to see the demand that we did for Circle. And yeah, and I would expect that, stablecoins aside, the broader crypto point, like that'll draw in a ton of new companies that want to IPO, because, when there's more demand than supply, then more supply will come in. And if we're talking about IPOs, and probably we'll see more companies go public. So I'm excited to see this, kind of shift. I mean, it is really cool over the last couple of years to see the complete pendulum swing back from, the Gary Gensler world to now all of a sudden seeing, Circle IPOing it, and, all the developments, JP Morgan saying that they're custodying, Bitcoin, or they're going to allow customers to borrow against it this week. All these things, I just think it's all moved so fast over the last couple of years, but when you really step back, I mean, it's incredible. It almost like this like divine intervention type of thing. I mean, it's just incredible how rapidly things have shifted back in the other direction, and I think it's probably just getting started.
Yeah, yeah. Divine intervention is a great word, a great way to put it, because I feel like, yeah, I remember me being all in this Austrian economics rabbit hole, studying the financial system, and before Bitcoin, I was like, just becoming a cynic and sort of low. This is all gonna blow up, and I will never have a chance to sort of excel in anything when it comes to finance. I will never own a house and stuff, And then I would feel like Bitcoin was sort of gifted to us as young people as well, and now we have all these big opportunities, and it feels like the opportunity set has never been larger. It's like, okay, we're speed running this new financial system which is being developed here, and we can take a part of it, and we can also financially benefit from this. It's just all so amazing. So yeah, divine intervention, that's a great way to put it. Maybe to finish up, I think we only have a couple of minutes left, but like your thoughts on Bitcoin, where we are in the cycle. From all we've talked about, I mean, there's no way you cannot be bullish long term. That's something we established. But short to midterm, I mean, some people have been speculating that we've maybe seen a double top. Like in 2021, where Bitcoin in May went up to 60 something, and then 69 in November again. And now we had the 109 and 112 or something. So is it about to put in a double top, or is there lots more upside ahead? What is your gut feeling in the
Yeah,
midterm? Yeah.
yeah. I mean, sometimes I feel like I have maybe a slightly better, kind of gut feel than other times, but in the short term, I can't say that I have a super strong view here. Um, I do think over the next, 2-3 years, Bitcoin's trading mid six figures a coin. I think kind of the traditional cyclical nature, these 4-year cycles that we talk about, I think that cooked. Like, I think that's done. I just think that the market participants are different. Also, a big driver of that early on was the halvings, but the halvings just aren't that significant at all relative to the overall issuance. Over time, the impact that the halvings have had on this growing pool of total supply has become further diminished, and now I think is like completely insignificant. So that's not a driving factor. So it's just like behavioral dynamics of like people, this like self-reinforcing thing, which works when the market participant pool is the same, but now we've got a new pool of market participants. So I think these people think about things differently, and they're going to be in the driver's seat increasingly so over the next 5 or 10 years. I think Bitcoin just trades like a traditional macro asset. I've got on my trading view, I've got yields in the US, a couple foreign countries. I've got DXY on here. I've got a couple currency pairs. I've got oil up here, and I've got Bitcoin. I think that's how people, kind of just like more macro based, fund managers are going to just start thinking about it. And so you'll see it, trade kind of more on like a, institutional level, closer to some of these, broader kind of, bigger, more established macro assets, as opposed to this like super infant, is that even a word, infantile? I don't know.
Infantile.
Right?
Yeah.
Infantile assets. So yeah, to
Yeah.
answer the question, I think the cycles are over.
Yeah, no. Yeah, infantile. Yeah, the toddler asset Bitcoin, and it's now growing up. That's for sure, and being institutionalized, and then it will have a more trade like traditional assets, and with traditional flows and everything. That's for sure. I mean, ETFs are playing a big part here as well. They've been a huge success story. We haven't talked about them, but it's just amazing. I had
I think
Eric.
the bigger one is the
Yeah.
ETFs have been great. I think the next big catalyst that some people have been talking about, but I just don't think people maybe fully appreciate is the unlocking of financing for people that hold Bitcoin. Any large real estate, any large asset class, real estate probably being the biggest one. There's a lot of value that's sitting there, but you want to unlock the value to be able to transact, do things, launch a new business, buy a new house in the Hamptons, whatever you want to do. But you don't want to sell the thing. And so, this has been kind of an issue for, like earlier Bitcoin holders. But I think now that we're going to have a, more robust, credit market around Bitcoin, that's going to unlock a lot of capital that's, sitting there, but wasn't able to kind of get liquidity from the position to date. I don't know, it'd be interesting for somebody to go in there and estimate what's the total, unlockable value of, capital that's in BTC, but will look to do some type of financing activities around their holdings, and like how much liquidity will that unlock? I don't know the answer, but it's like not zero. So I think
Yeah.
because all that's going to all get reinvested probably in like Bitcoin adjacent things because they're, large Bitcoin.
Yes, for sure. And to your point, I mean, the same would be why the cycle might be changed. So the behavior is also like these people, when they can't sort of borrow against their Bitcoin and get this liquidity, had to sell at some point, And nowadays, if you can really borrow against your BTC, and I see it with the bank that I'm at, people come, they bring their BTC and they don't have to sell anymore. It's really like they can unlock this liquidity and that flows back into the space. And I think that will also change behavior and why we maybe see shallower drawdowns and stuff, just because like people won't have to sell that much anymore because of the financialization that's going on. So that might also have its impact. That's for sure.
Yeah.
It's so interesting. I mean, we're almost at the end. I want to ask you this one last question because now that I have you on, you amassed such a huge following. I mean, you're one of the KOLs, I would say, within the crypto space, and there's others like Ansem and all these people. Not sure if I can compare it to him, if that's a compliment or not. But my question would be, how's the life for a KOL? Many normies like me, they feel like, okay, these people are being offered like all these insane deals, and then they're all going to dump on us. And I've seen some screenshots from people like sharing stuff around that just sort of sounded and looked sketchy. So how is it also to keep your integrity, as being one of these KOLs? Because I feel like, yeah, like there's so many projects that want you to speak about their token. And how have you sort of dealt with that pressure and just the gameplay?
Yeah, sure. It is a very strange thing. Um, I can assure you that to anybody listening, I've never dumped a token on my audience. I've never, been selling a token as I'm telling somebody to buy something. I've had some horrible calls, and I'll own up to that for sure. But I've tried to operate as ethically as possible. Um, but that stuff is 100% there. Less so now, I think, because I've just maybe people know that like I don't do that stuff. I have done, private like venture deals and stuff like that. And, anytime I post about something that I, have invested in, I'll disclose that, of course. But these things where, people will say, hey, we'll, we'll pay you in tokens, but you have to, shill it for a certain amount of times or something like that. Of course, if, uh, of course, I think if you invest in something and you believe in it, you should back it publicly, of course, because you believe in the thing. But, if you're buying some, completely garbage, 500K market cap token and then tweeting about it and selling while, you're presumably, people are looking to purchase the thing. I mean, obviously that's unethical. And I think, I'll always stay away from anything like that. But I mean, that stuff is 100% there. I just think you have to think about it as like, what is the, I don't want to put this in a way that sounds like extractive, of course, because, that's a horrible way to phrase it. But, what's the value that you can generate from having distribution personally, over 20, 25, 30 years, right? The world's becoming increasingly digital. And so, having distribution and, the ability to, not just for yourself, but also for people around you too, shouting out something your buddies are doing. I mean, but, of course, selfishly, you build a business. I mean, this was kind of, what we did largely with the research business was bootstrapped it with, my personal, account, as well as Anthony. So, I think you have to look at it as an asset, and also just, ethically, like just try to relatively do the right thing over a long period of time. But yeah, I feel like I'm talking circles, but yeah, that stuff,
No, no.
and there, man.
Yeah, and no, that you're exactly right. I mean, you just have to be ethical, because I think in crypto, if you do something over a long enough time scale, it will come out, the truth. Because like these rails, they're so transparent, and you have like people who, I feel like some normies, they do nothing else than just like tracking these flows, and then you get tracked down, and at some point, yeah, it will just all be obvious. And I'm seeing the same thing with the bank, where I have some insights that I obviously cannot share, but I'm sometimes really impressed by how like community people actually get names right and figure stuff out. I'm like, wow, how did they do it? They have to have some insider information, or otherwise. So yeah, it's probably just, even though it's sometimes life-changing money that's being offered to you guys, it's probably not the right approach to go that route, because yeah, you will be exposed at some point for sure.
Yeah, it's definitely a strange thing, especially when when the account first started blowing up when I was like 18, 19, to kind of manage and, so the attention. Obviously, I'm like a Z or X or Y tier celebrity, so it's not like, I'm like airheaded thinking that. But, there is it is like the account is quite large now. And so, at the beginning, like when it first started to grow, it was like, okay, well, how do I maneuver this stuff? How do I change how I'm, talking about things publicly? I think one thing that maybe people kind of appreciate is that I try to always like tell it how it is. And sometimes that translates to me being like slightly raunchy, but like I feel like that's, people kind of know me as like I try to tell it how it is. And I think the big thing is, people like people that they can trust, even if, you're not right all the time, especially when you're, if you're talking about markets, finance, you're obviously going to be wrong at some points in time. But think what people do appreciate maybe is, when you try to be honest and like tell people what you really think, or when you change your mind, like these types of things. So yeah, man, I look at it as, I appreciate everybody that supported me over the years. I really do. Anytime I ever meet somebody in person that's like, hey, I recognize you, I always try and stop and have a conversation with the person, and just tell them how much I do appreciate the support, because obviously, my life has changed, quite a bit over the last couple of years, and I owe that to everybody that's supported me over time. So yeah, I look at it as, the symbiotic relationship of like trying to provide value to those people. Maybe a funny tweet here and there, but obviously over the long term, over, 40 years, whatever it may be, that I'm on the internet, um, you know, you want to continue to do things that are providing value back
No.
to people, and it's this very like symbiotic thing. So yeah, the last thing you want to do is pump and dump, some random coin on your followers, because that's, you're pulling forward. Maybe you're pulling forward some of the, value that you could generate over time. But you've completely torched your reputation, which is like the biggest thing in business, I think. And, then
Yeah,
that's,
it's not worth it. Yeah. No, no, that's great to know. And yeah, I mean, you do provide value, and just so keep it up. And it's amazing to have you around again. So, Will, I think I want to let you run. Thanks a lot for doing this. We've gone over an hour, and yeah, just appreciate that, man.
yeah, of course, this was awesome. And, hopefully I get to see you in Switzerland soon.
Yes, exactly. That would be nice. Let me know once you come over. Okay. Have a
Cool.
great one.
All right,
Bye,
man.
Will.
Thank you.
Thank you. Bye.